Hello, everyone, and welcome to Tax Series with BudPay. My name is Maryjane Okpala. I am a senior growth lead here at BudPay and also an entrepreneur. And today I have a very special guest with me who happens to be an audit specialist, Mr.
Olushola Awonola.
Today, we're going to break down the tax reforms that all of you have heard about. We're going to make it as simple as possible for you to understand so that you and I on the streets, the layman out there, would know the implication of this new tax reform for yourself as an individual and as a business. So right before I dive in, Mr. Shola, thank you for agreeing to come in this series with us. I have a couple of questions that I would really love for you to break down and help educate everyone out there just so that they know what the tax reform is about. So my first question to you would be, as a finance expert, could you, summarize the new tax reform in layman terms?
The new tax reforms, I'll just speak to four things. The first one has to do with if you earn income from abroad or you're a remote worker, expect that there will be a close monitoring on you. Close monitoring means, unlike before,
would they
you
be taxed or not?
They will. Everything goes through the system.
Okay.
So you have it work. Everything passed through the system. When I mean the system, it passed through the bank.
So let's simplify it this way, just so that those watching understand exactly how this impacts them. Is there a possibility of being taxed over 25%? Being that it's progressive, right? Okay. And not everyone who works a remote job earns the same. Some people really earn very good on remote jobs. So somebody can earn as much as $20,000, as much as $25,000. So is there a possibility where the first 800,000 is exempt? And by exempt, I mean removed. It's not taxed on. Then the next 15 million is 15%. And the next 20 million is maybe 18%.
Yeah.
Is there a possibility of it getting as high as 20% or even 25%?
Okay, so to your first question, the tax is being capped at 25%. So it can never be more than that.
Regardless of what you earn.
So because it's progressive, your payment is dependent on what the metrics or the indices or what the breakdown of your salary is. So it will keep progressing until at the end of the day, the effective tax paid will not be more than 25%. And that is the good thing. That's one good thing that is done in Nigeria outside what other countries experience, like in UK,
where there's no cap on the tax, and you literally pay through your nose.
People pay close to 35% tax on their income.
So there you have it. If you're a remote worker who probably had thought you were going to be exempt from the tax, we're sorry to let you know that you wouldn't be exempt except you earn below 800,000. The moment you earn above that, you will be taxed within a range of 15% to 25%, but not above 25%. So, Mr. Olushola, my next question to you would be, from an audit perspective, what is the single most costly tax mistake SMEs are making right now under the new law leading to high tax penalties or leading to the highest penalties?
So today, the single most costly mistake made by SMEs is the inability to deduct and remit the withholding tax payment to the federal government.
What is withholding tax? Just so that the viewers understand what withholding tax is.
So withholding tax is the advance payment on income. So for every organization, for every company, for every enterprise, you have to pay the withholding tax in advance to government. And what it means is that on your invoice, a withholding tax, you must ensure that withholding tax is added on it. And it is based on that withholding tax is paid. Now, withholding tax is paid we have 5% is paid for tax for services being rendered,
Okay.
while 10% withholding tax is paid on dividend. So these are the cap for withholding tax.
In very simple terms, I understand what you just explained, right? But the regular person on the street might not necessarily understand what dividend is, what income is. So I want us to break it down as simple as possible, just so that everyone who's watching out there is able to follow along.
The way I will address it is this. So if you want to, if you're buying, if you engage in a contract with a supplier or a vendor,
Okay.
and the cost of that service, let's assume, is 100,000.
Yes.
At that point, you're expected to pay 5% of that 100,000, and 5% of 100,000 is 5,000 naira.
5,000 naira.
That will be either added or deducted. So you can pay, the invoice can be in gross or at net.
And by gross, you mean?
It means that the withholding tax is inclusive in the net amount that you're given.
So in essence, you'll be paying 105,000 as opposed to 100,000.
Exactly.
Okay. Okay.
And if it's a dividend being paid you by a business,
And by dividend, you mean?
dividend is just a kind of rewarding what your investment in an organization has yielded in an organization.
So, for example, you invest 100,000, and your dividend payout is probably, maybe the 100,000 is worth 10,000 shares, and your dividend yield is about 10 naira per share. So, in essence, you're going to calculate 10 naira times 10,000 unit of shares, which then gives you the dividend to which you will be paid for
tax.
the 100,000. So the tax that would be applied on that dividend, which is the earnings from your investment, is how many percent again?
10%.
10%. So there you have it for those who are wondering.
There's also a provision that there's also an interest that will be charged on the unpaid withholding tax.
Oh, so aside from the penalty,
aside from the penalty, yes, the Federal Inland Revenue Services have the mandate to charge you an interest on the unpaid withholding tax.
And what percentage is the interest?
So that percentage will be determined by them. So it depends on, it could be the ruling, what is the ruling interest rate in the market at the particular point in time. So interest will also be charged. So what it means is every SMEs must be conscious of who you deal with, who you engage with in business. And all these things are things that must be factored into before going into a business contract with anybody.
Thank you so much, Mr. Olushola. So just to simplify it, it's more or less like when you go take a loan, for every loan you take, there's an interest attached to the loan. Now, in cases where you default on that loan, you're expected to pay interest or interest on the interest of that loan, right? So as an SME, what you should look out for to avoid high penalties on your withholding tax is, one, ensure that you file as at when due, ensure that you're very careful with whom you're dealing, ensure that all your I's are dotted and all your T's are crossed. So, Mr. Shola, how can I safeguard my business from withholding tax non-compliance penalties when drafting a contract with a supplier or a vendor? How can I prevent the penalties as a business owner when I am about to enter into a contract with a supplier or a vendor? So, as an entrepreneur, I want to purchase goods from China from my supplier. What do I need to do?
Okay, so the first thing you need to do is your documentation. When drafting the agreement, there should be an inclusion of the fact that withholding tax must be paid. So you have to draft it in your contract agreement. It must be structured into it. And also there must be proof of payment. Proof of payment or proof of payment shows evidence that the supplier or the vendor has remitted that withholding tax paid.
Okay.
So the receipt will be given to him or her, and or a credit note in such a way that you can use that to reduce your liability. So the third point whereby you can use to guide yourself is you ensure that both parties, there is this joint liability, that both parties are aware that whether the withholding tax is included or not, you must enforce it. So as a payer, you will be fined. As a payee,
supplier,
you will also be fined.
Okay. So in essence, just to summarize what you said, what an SME needs to do when going into a contract with the vendor is to ensure the invoices are correct, the amounts are clearly stated, there's a joint agreement or understanding between both the supplier and the business person.
And the contract agreement,
Knowing that there's going to be some deductions from withholding tax and then the contract agreement. So there you have it. Thank you so much for sitting with us on this episode of Tax Series with BudPay. And I'll see you at the next chair with another very special guest where we will delve deeper into the tax laws because he is a financial expert bringing you all the knowledge that you can think of.